Good morning, Red Lion Trader here, going over the weekend review for the TTTHedge.com trading room and for RedLionTrader.com. Let's get to it. Let's get the charts and let's see what the last week had in store for us. This is a 15-minute chart of the three indices that I've been tracking, which is the NYSE, the composite, the NASDAQ composite, and the RUT. So looking at the week, this is the percent change from December 27th on these charts. So you can see that we gapped up on Monday. We made a new high on the composite, on the NYSE, and I even think the RUT made a new high. And as the week continued on, the RUT continued to get weaker and weaker. We had a really nice rally on Thursday as the RUT came back up, but the Friday's gap open was not able to hold. RUT sold down, and then of course we had the Friday close, which we'll talk a little bit more about on when we look at some of the indicators. So strength stayed in the composite, the NASDAQ composite, although it did get weaker during the week. It remained positive until the close for the week, as opposed to the RUT, which basically was selling off. And the NYSE peaked on Tuesday and was unable to make that peak. So we saw strength on Monday, weaker Tuesday, weak Wednesday. That's right, a weak Wednesday with a nice rally back. Thursday, there was no Friday, so Thursday we had the gap that failed. We settled into negative territory, and then there was a rush for the exit. So total for the week, the RUT closed down about 1.4%. Then the NYSE closed down close to 1%, and the NASDAQ composite closed down about 0.75%, 0.724%. So that's strength. Composite, NASDAQ was the strength, and weakness towards the end of the week was the Russell itself on a percentage basis. So how did that set our charts up, our breadth charts that we look at? Let's look at the 40-day moving average. So this is the 40-day moving average. This is the number of stocks that are trading above or below their 40-day moving average. So currently on the NYSE, which is our orange stock, 70% of the stocks are trading on the above their NYSE. So it's very, very bullish, very good underlying strength. We like to see the strength continue to build, and continuing to build for us is staying above this 20-day moving average. So you can see, in fact, that we're actually getting pretty close to breaking down and breaking through. So there hasn't been a lot of room there. So we need to watch for Monday to see if we can have continued fall through weakness. This chart actually scores a 0. So we went from a fairly bullish situation previously to a neutral situation. So let's move on to our 10-day high minus low. This is the number of stocks that are making 10-day highs, and subtracted from that the number of stocks making 10-day lows. This, I thought on the sell-off would actually be a little bit more bearish than it is, but in fact Thursday's close showed a little bit of a strength in the day. So there was actually more stocks making continually making 10 days highs than making 10-day lows, and there was more stocks on Thursday than there was on Wednesday making 10-day high, making 10-day lows. So that strengthening on a day-to-day basis is we consider a bullish move. However, the 5-day moving average continues to move down, which shows a sign of weakness. So again, this chart itself scores a 0, so it's also a neutral chart. So we have two charts that are neutral. When we do that, we go to the 52-week highs and see how they score. So moving to the same three indices and looking at the 52-week high, you can see that also divergences here. So again, just like we saw on the 10-day high, Thursday was stronger than Wednesday, but it was not this kind of strength, which is what we would really like to see to continue to be bullish. So we see weakness on a multi-day basis, but we saw strength on a day-to-day comparison basis. So in fact, this puts us at neutral. So in fact, we score all three charts at 0, and we sit in a neutral area. So it makes it very difficult to decide what we're going to do. And we had that huge sell-off on Friday as people exit for the doors. It's hard to read that, whether people were just nervous about holding over the 3-day weekend because of some of the geopolitical and some of the terrorist threats, or whether people were actually leaving and trying to cash in their profits on the last trading day of the year. So I can't really make a bull bear call, but what I can do is set up some benchmarks so you can decide, or you can come into our trading room or join our service, and on a day-by-day basis as we get more information. Here's the composite. We'll go from strength and we'll go from weakness. This is really this chart really broke out on the 21st. We had this gap up, and then this chart really ran. We talked last week about being sideways, and it's pretty much what we did for the week sideways. Tried to make new highs. We made a little bit of new high, pulled back, and you just see this kind of weakening here. So it seems reasonable that we have this top here in place, which we broke out of, and it seems reasonable that might get tested, but certainly some of this strength there's got to be some waning here, and we should be able to come back and test this this trend line here, which puts that around 2250 on the composite. So I would watch 2250 to see how the composite reacts. Currently, of course, if it continues to rally from here, that's extremely bullish. But I would expect some weakness here to come back and let some of the other indices catch up. One of those other indices is the rut, and again you can see the same thing on the 21st. Here we have the a breakout, and this index continued to run. Made its new highs on Monday. Again, we called for sideways markets, and we saw sideways markets, but we see on the rut, we see continuous weakness. It was not able to get as high the next day, and then we had that tremendous sell-off on Friday. So it's reasonable to watch this 620, the 624 area here to see if it breaks lower than that. Let's see, that's 618 area would be reasonable to watch to see if that can hold for the weakness, and of course down to this 602 area would be the next level down. So those are kind of fire stops on a correction for the rut. So those would be things I'm watching, and then I would be of course watching on the breakout side up above these highs to see if they break out. So if you see it move up here, you better be long. If you see it start breaking down below here, then we're in for a correction, and Friday's close was a indication of that. I think one of the more clear indices to follow would be the NYSE, which was weak, and this is going to have to strengthen if we really are going to get the next run up. And you have a clear top here at 7238 on the NYSE. It did start its breakout above that, was unable to hold, and again you saw this kind of selling off here. So break above this 7238 and the continuation up would mean that the markets are going higher. If we see continuing falling, we want to be watching this. We want to be watching the 7065 area here to see if that holds. So trading within this range here of 7238 down to 7065 is kind of a no-man range-bound trading range that we had been in since November 9th. I think we're going to break one way or the other pretty soon here out of this range, so I will be using this really to be my tell of which way I think the markets are going to go for the next week. So if you wanted to keep track of that, you want to come into the trading room. We will run the breadth charts intraday to see if we can determine and get those things out of neutral one way or the other to make a determination. And we'll be following the NYSE on a day-to-day basis. So this is Redline Trader for tthedge.com, talking about the week ahead and the week behind. If you needed more information about membership, please visit http://ttthedge.com.